Hi there. Thanks for joining us here at PhillipCapital Market Watch. I'm Jin Ru from Phillip Futures. Today, we will be discussing the topic 2020 Outlook, Recovery or Recession. 2019 has been an eventful year. Headwinds are still present in the form of trade conflict uncertainties, falling global manufacturing activity, and loosening monetary policies implemented by central banks worldwide. There are also political tensions caused by the impeachment of the US president, as well as the Brexit that hasn't been finalized to date. Firstly, let's talk about the impact of the trade war on 2020's global outlook. Phase 1 of the trade deal has been reached and a portion of the tariffs were rolled back. However, issues such as the large number of subsidies the Chinese government provides to their domestic producers and forced technology transfers have not been touched on. There is still a high chance that escalations will occur once again, since the US has shown strong support for Hong Kong's fight for freedom, incurring the wrath of the Chinese government. History is also likely to repeat itself, where trade talks broke down after both parties struggled to reach a consensus with regards to the thornier issues mentioned earlier. This will remain in the spotlight for 2020. Subsequent escalations are certainly going to put a drag on the global economy and could possibly drive it to the brink of a recession. Central banks worldwide have also been gradually lowering interest rates in a bid to boost the economy. However, most countries are already near to the zero lower bound, which severely limits the effectiveness of monetary policy. There is also little room for central banks to further cut rates. The Federal Reserve has adopted a wait-and-see approach, thus leading us to expect no further cuts in the next 6 months. However, emerging economies do not face the same constraints as developed economies, and thus they are still able to effectively employ monetary easing to stimulate the economy. We expect that this could spur minimal recovery in the global economy. Therefore, monetary easing should be implemented in tandem with fiscal policies. Most Asian economies have been shoring up their fiscal stimulus packages, with China having one of the largest stimulus packages in the world. However, fiscal policies increase government debt, and there is a time lag between the implementation of the policy and the effects arising from the policy. We expect the fiscal expansion to not affect economic growth in the early half of 2020, but it will aid in the recovery in the latter half of 2020. There have been recent developments in President Trump's impeachment case. Namely, the House has impeached President Trump on 2 different charges, abusing his powers as well as his obstruction of Congress. However, he will still have to go through the trial early next year by the Senate, which will most likely result in him being acquitted by the Republican-controlled Senate at the trial early next year. Negative repercussions to the economy remain relatively unknown. There could be positive impacts if Trump is removed from the office, since a new president might be more open towards a compromise on trade issues. We expect some market recovery in 2020, but the economic climate remains gloomy. Sluggish growth is expected to persist as weak fundamentals will be the largest impediment to growth. Should there be escalations in the trade war, we would expect the export slump to persist, which could tip the global economy over the brink. That's all for PhillipCapital's Market Watch this week. Do remember to follow us on social media and subscribe to our YouTube channel. Also, tell us what you think. Leave your comments. Thanks for joining us and see you soon.